last 48 hours, the market got the best inflation news since 2020. CPI fell 0.4% in a month, core came in at zero, PPI went negative, and the banks just printed $49 billion in profits. And the SMH still couldn't hold the $600 level. Something in this tape doesn't add up, and today I'll show you exactly where. Monday I told you the leader was broken and the only thing that mattered was whether SMH could remain 590 and 600. It did in one day, then today it gave 600 right back. CPI, PPI, the banks, and what QQQ, SPY, and SMH are actually telling you. We're going to go over the exact levels and let's get right into it. Taking a look at the overall markets today, we can see that the Dow printed a 0.29% gain, the Nasdaq was up 0.62%, the S&P 500 was up 0.38%, and the Russell 2000 was up 0.44%. Overall on the day, it looks like on the surface, the market was healthy and we did continue to grind higher. When we do look closer, we can see that communication services was the leading sector in today's market, along with consumer cyclical stocks. The financial sector was also able to help pull indexes higher. Technology, energy, and utilities were the laggards on the day, and on the week we can see that healthcare rotation out is occurring. Yesterday we received the June CPI print. The headline CPI dropped 0.4% on the month, and the street expected a drop of 0.2%. That's the biggest 1 month drop since April 2020, and year over year CPI inflation was 3.5% versus 3.9%. What this is starting to tell us is inflation is dropping in the short term, and the Federal Reserve should not have a reason to raise rates as anticipated. This morning we were able to receive the June PPI inflation readings. PPI came in with a drop of 0.3% on the month, the first monthly decline since August 2025. Goods lost 1.4%, the biggest drop since July 2022. Wholesale gasoline dropped 12%. Core PPI with just a rise of 0.1%. The Fed's reaction the same day, as per John Williams, says there are encouraging reasons to expect that inflation has peaked. The market implied odds of a July rate hike have collapsed from 42% down to just 17%. And this does fall in line with what we saw across markets yesterday, as we saw most of the indexes across the board rise. What really did spook the markets today was the Federal Reserve Chairman, Kevin Warsh, did have his testimony in front of Congress today, and he did pose a threat to the AI CapEx narrative, saying that capital expenditures by companies will not be able to withstand these levels, directly targeting memory names such as MU and SNDK. We'll go into more detail later in the video and see how the SMH and these particular stocks were affected by this commentary. Taking a look at the Nasdaq, the QQQ, we can immediately see without any levels on the chart that price is respecting the 50 EMA, as we did not come down to this level. Bulls are continuing to support the 50 EMA currently at 706.80. One thing to notice today is we did have a red candle and the QQQ did lose 0.27% intraday, but we were down at lows of around 710 and 711 on the day. So we did get a nice bounce and bulls were able to push price higher. Although we were not able to close the day above the 8 and 20 EMAs, only about $1 off, the day was mainly flat and it looks like market makers were just trying to chew up 0DTE options holders. Taking a look at the main levels on the QQQ, the story remains the same. As long as we remain above 713, bulls are in control, and we've really been just holding within a range of 713 and 736. 725 has continued to be a level of resistance where we can just not get above this level. But with the current CPI and PPI inflation readings, I would expect the market to continue to grind higher, and we will capture the 725.65 levels. So remember, as long as bulls hold 713, the bulls are in control. If 713 is lost, expect support at the 50 EMA, which currently sits at 706.33. And if 706 is lost, expect support at the psychological level of 700. Taking a look at the SPY, the proxy for the S&P 500, we see a different story than the NASDAQ. We ended the day up 0.4%, and we can see we're within 1% of all-time highs of 760. The S&P has also been able to respect the 8 EMA as price continues to grind higher. Overall, it looks like we are in a healthy bull consolidation towards the upper range of this channel, and bulls are remaining in control. I expect all-time highs of 760 to be broken. Now let's take a look at some of the main levels on the SPY. The main level on the SPY that you want to keep at top of mind really is 749. Call it 750, the psychological number. Over the past 10 trading sessions, we really have been lingering around this level. And over the past, 5 sessions, we have respected this level. The 8 EMA continues to rise and remains as support. I expect price to move higher from here. So we're looking good from the bulls perspective. The S&P is currently looking healthy, and overall breadth of market looks strong. Now let's look at the main event, the SMH. What did semiconductors do today? Taking a look, it looks like price intraday dipped right to the 50 EMA. It even pierced it with a low of day coming in at 573, but bulls were able to step in and recapture the 50, which is a good sign. We've been here before, just like we saw on July 7th. We pierced it, and 2 days later you went from 567 all the way to highs of 618. Bulls really do want to get above the psychological level of 600. So tomorrow is going to be interesting to see. Really, what did us no favors were the commentary from the federal chairman, Kevin Warsh. He mentioned that he doesn't believe that the CapEx that we're seeing across major Mag 7 companies and hyperscalers will be able to proceed. So this did scare many market participants along with memory names. We can take a look at common memory names such as Micron. Micron suffered an 8% down day. Let's look at SNDK. SNDK ended the day down 8% as well. So overall, memory names have been getting crushed. Now let's look at the main levels on the semiconductor ETF. So we bounced perfectly off 581, which has been a level of support here within the last year, and earlier in May, you did see that this was the previous resistance level. What we do want to see is this resistance and the 50 EMA hold us. Getting back over 600 is imperative, and from there we must reclaim 612 if we have a shot at getting back towards all-time highs at 671.